Welcome back to Wall Street Confidential. We're discussing Comcast on the heels of its latest earnings report. Q3 profit up more than 30%. A drop in capital spending helped, higher cable TV rates. But interestingly enough, Jim, and you point this out in a random musing on Real Money, that Comcast execs talked about having ample liquidity. Does that worry you when you hear those words?
I never thought that there was even an issue with liquidity. I thought they were swimming with liquidity. So for them to issue a statement, I think was something that kind of took my breath away.
People are expecting these kinds of disclosures, though, these days.
I know, but Comcast is a company with giant cash flow that has cut back its capital expenditure, so therefore the flow should be bountiful. The analysts really got this wrong. See, they all decided that Comcast was good, and they all decided that Verizon was bad. And when you see the loss of basic cable, you can either presume that people are going back to rabbit ears, or they're going to Verizon. And this took a lot of people by surprise, which is amazing, because if you go back and read what Ivan Seidenberg said over and over again, he said, listen, this quarter was a transition quarter for Fios, the previous quarter, and now we're going to turn the jets on to Fios. Verizon's swimming with cash. There's no issue with liquidity there. That boosted the dividend. Mm-hmm. So what this made me think is that once again the analysts backed the wrong horse, and that they'll now switch to Verizon. And if Verizon goes up too far, I will switch back to Comcast. But the basic cable loss was disturbing, but the company itself, by issuing that liquidity thing, made me immediately think, I got to check the letters of credit. I got to see what they have. I got to see what their credit lines are.
Because you've heard sort of that statement before, people hiding behind the truth.
I mean, if they had left it off, I would have probably thought this is a buying opportunity.
Mm-hmm. Well, I mean, just looking at the news headlines this year, but they're very strategic. They made some acquisitions this year. They're getting into areas like online retail. They bought Daily Candy.
Look, there's three kinds of companies I want. I'll reiterate. I want recession resistant. Cable turns out to be much less recession resistant than we thought. I want companies that offer really good dividends so that there's a trampoline effect when they go down. We certainly didn't have that. And I want companies that are trading near their cash value, okay, so that I have some sort of cushion. Comcast is the definition of the anti-Cramer strategy. It doesn't have any of those. When it doesn't have any of those, it's just completely off the table.
All right. Thanks very much, Jim. And you have a piece on this coming up soon.
Coming up, haven't written it yet.
So look for it on realmoney.com. You're watching Wall Street Confidential. Stay tuned.